Good morning, everyone. My name's Doc, and welcome back to the channel. Today, we have the pleasure of speaking to trader Mercury. You guys may know Mercury from his often viral threads on CT. He has a core focus on the cyclicality of markets, playing trends, discipline, patience, game theory. What I love about him is he breaks down crypto in terms of being a cyclical game, and game being the key word there. That's really what I get most out of his content. He's always trying to play chess with the market, position himself in a place that gives him an advantage against his quote unquote opponents, because at the end of the day, trading is a PvP market. It's very rarely a PvE market. And what I love about him most is he's pretty much the living example of that famous MGNR quote of, a few times a year, there's free money on the floor, pick it up, then do nothing, outperformance. So without further ado, Mercury, thank you so much for joining us.
I appreciate it, man. That was a killer intro.
Yeah, try my best.
Man, you hype me up. I'm starting to feel pretty good about myself now.
Hey, man, you know what's it's funny? The first I think thread I saw about you last year was something about a bunch of your calls in 2022 and kind of just comparing it to GCR and being like, look, I don't want to like scratch my own back here, but I've called these things before the predictor himself has. So I thought that was pretty cool.
Yeah, I actually got a lot of hate for that thread from friends. It did well from like the average person, like my average follower actually really enjoyed it. But I had a couple friends message me about that and say, "Dude, stop comparing yourself to other people." And like, you don't have to have a lack of conviction in your own kind of stance in the market, as long as you're just comparing yourself to you and you are just getting better. And so it was honestly very eye-opening. I don't know if I should name drop, but a lot of people who are well respected in crypto messaged me after that thread, and that actually incentivized me to want to write a book, because what other way to be your own trader and kind of get your thoughts across and be yourself than to just put all of your own philosophies and ideologies in one cohesive form of writing. So I'm actually passively working on a book. I say passively, I'm probably not putting in as much effort as I thought, but or as I should be. But yeah, so I'm working on that on the side, and in the meantime, I'm trying to refrain from getting overly confident and start comparing myself to GCR. But
Yeah, I think that's a dangerous thing to do. There's that classic saying of like, if you're the smartest person in the room, you're in the wrong room. So you always want to maintain that position of I'm the student, I'm not the educator. Even though sometimes, people like us who live and breathe and die the markets, we have a lot to offer from an experience point of view, but it's always smart to stay humble and be like, there's someone out there that's better than me, and be chasing and learning rather than focus too much on educating.
100%. Yeah. And a good way to transition that into today's market is the idea of opportunity cost. So, if no one knows what I'm talking about, opportunity cost is essentially acknowledging a potential opportunity, but neglecting it in order to opt for a better one, and then potentially not being able to reap the advantage of either opportunity. So, you pay a cost to the market. You're not actually losing anything, but if you are emotionally attached to something, then it might feel like you're losing. A good example of that is I've managed to catch every single uptrend so far this year. This one being a fluke, by the way. I don't know if you're looking at my screen or not.
Yeah, I can see it perfectly.
Okay. This one was a total fluke because this was the USDC DPEG FUD.
Yeah.
So technically, per my chart, per my outlook, the same mindset that I had to kind of assume that this kind of an uptrend would start in the first place. Technically, all of that is screaming bearishness. My technicals, my chart, my analysis, all of my philosophies, all of my ideologies are screaming, do not buy Bitcoin. Because I'm just simply a trend trader. I'm never the person who's going to try and call tops and call bottoms. But this one was a fluke. This is the USDC DPEG. I actually managed to buy this one, but it was more of like the market kind of pushed me into a corner and said, hey, you have a couple options. You can either buy Bitcoin, which looks terrible, or you can hold your money in these stable coins that might depeg, or you can put your money in a bank account that maybe is going to go insolvent, because at the time there was a lot of banking FUD, and it's only FDIC
not a lot of
insured
good
up
options at the time.
Yeah, so it was like, here's a bad option, here's a worse option, here's a worse option, right? So it was like, okay, I have no option other than to buy Bitcoin, and ironically, this is literally what Bitcoin is created for.
Yeah.
This is the one time in 3 years that I used my brain over the chart, and kind of put an emphasis on my thoughts and my kind of speculation over whatever the chart was saying. Ironically, this ended up being my best trade of all time.
Mm.
But other than that, I've managed to effectively navigate every single shift of this market, both towards upside and downside, effectively. And my account sits not very far off of new all-time highs as we talk. But I know in the back of my mind, I'm not allowed to increase my conviction in my own abilities. It was more of the market gave me that luxury. The market allowed for me to acknowledge a range low breakdown in a shift of 4 hour 200s, and it right, and I got lucky this time. Right, the market allowed me to cut a spot position upon losing 4 hour 200s and really not pay that much in terms of loss and like additional drawdown. Right, so if I'm waiting for like a 4 hour candle close, I don't have to wait that long before that happens, before I can understand, hey, this is probably breaking down, this time's probably different. Right, the market provided me those luxuries. And back here, actually, I was not using 2 hour 200s, because I'm a believer of most efficient trend portrayal. So I'm just going to kind of
Yeah,
look at the chart.
I've heard you say that before, and I think that's really interesting because not a lot of people understand that. That's been a big part of my trading in 2023 is adding trends because crypto is the most parabolic asset class like ever created. And if you can't ride a trend, like what the hell are you doing here? But a lot of people that ask me, like, Doc, do you use the 4 hour trends? Do you use the 1 hour trend? Do you use the daily trend? And it's what you just said right there. It's like you use what the chart is telling you to use. You find
Exactly.
out what the chart is telling you that it respects, and then you just say, okay, well, I guess that's what I'm doing.
Yep. Yeah, exactly. So I call it most efficient trend portrayal. Actually, people in my Discord have started to make an acronym, METP. So they asked me, Mercury, what do you think the METP is? I'm like, dude, what? And I have to remember, oh, yeah, they're talking about most efficient trend portrayal. But all that means is like, when I go look at a chart, I'm going to ask the chart, hey, what is it that you're respecting? What do I need to kind of be speculating on? And where should I be scaling my assumptions? Right. And then I can break that down low time frame and then have a low time frame trend portrayal, and then I can scale that assumption based on context of whatever the higher time frame is doing, and then maybe on the highest of time frames we're in a range, right? So I can have a nice little way of navigating the market at any given time on any given time frame. But like for this example, losing 2 hour 200s, right? And so for me, my interpretation of market structure, and because simply we lost the 2 hour 200s, I was able to efficiently come in and get rid of the spot position, from buying a fluke of a bottom and having the best trade of my entire career. I was able to get rid of that. And then, right, and then from here, chop, and I'm forced to kind of switch bias and I get destroyed. But eventually I have the wherewithal to acknowledge, hey, this thing was working and it was working again, and now it's no longer working. Maybe I need to adapt, and I can
Right.
come in and say range. But no, the idea is, the whole point of my rambling is the market has provided me the opportunity, and it's been a luxury. I've been able to come in and play things on my terms, and I haven't really been forced or been sidelined or been stuck in a position, which is the reality of trading. That is going to happen. You are going to miss out on moves. I know a lot of people who, because I was able to acknowledge, hey, this is a deviation of a range low. Deviations imply resumption of ranges. But further than that, we had 4 hour 200s also being reclaimed and retested. And based on the highest of time frames context, testing 200 daily moving averages, also testing a key weekly demand zone, I'm able to assume, right, based off of low time frame kind of strength arguments, that we're probably going to continue uptrending and create yet another yearly high from here. And I know people are saying, Mercury, I missed out on that. What would you do if you were me? It's like, dude, I don't know. So the whole point is to try and put myself in a position where I don't have to ask myself that question, because I know I do care about Bitcoin more than just it's an asset that I come in and trade, and try and extract money from. I actually do care about the fundamentals behind it. So I make sure that I have a sense of balance in the background. I always have a ledger. I'm always at peace with whatever the market does. Basically, the way that I think about it is I'm able to assess the market the same way that someone who doesn't know what a risk asset is. And, somebody who's just working their 9 to 5 and they're constantly essentially dollar cost averaging into their 401k, which is then getting distributed across all these different risk assets. They don't know, they don't care. The stock market crashes, they have no clue what's going on. They're just going to clock in, clock out, and then go about their days. I'm able to come in with the same amount of emotional attachment to an asset class, and that's what provides me the opportunity to come in and make these rational analysis, right? Where like people are getting euphoric because of Grayscale, right? Grayscale wins an SEC lawsuit, and I'm like, one, I don't care about Grayscale. To me, they've been totally irrelevant since inception. They've had a massive jump on the space. They literally, Grayscale has been created since 2013. I don't think a lot of people realize that. And to me, I don't know anyone who uses Grayscale. I've never used Grayscale. Barry Shilbert marked the exact Pico top in November of 2021.
It's been a kind of pathetic product for a while, right? Like,
yeah,
anyone who got exposure to it is getting burnt the last 2 years. 3
yeah,
years.
exactly. So to me, it's like my arbitrary thoughts, which again, I told you in the past 3 years, I've used once. My arbitrary thoughts are telling me, why the hell do I care about Grayscale? And then the chart is also telling me, well, no, you shouldn't be caring about Grayscale because look, we're downtrending across the same level that we've been downtrending across for the past month and a half. So what makes this time different? And it's like the fact that we have local strength, right? We broke out of this range. Cool. I call that a snowball, right? So the idea is if you ever wanted to see a new yearly high again, if you ever wanted to create a snowman, you have to create a snowball first, right? You can't get to here without reclaiming the 200 daily moving averages. You can't get to reclaiming the 200 dailies and this supply zone per se without reclaiming the 4-hour 200s. You can't reclaim the 4-hour 200s without breaking out of this range first. So this is a snowball. It's a bigger snowball. It's a body of a snowman. It's a full-fledged snowman, but one thing has to occur. So to me, it's like, is it significant? Sure, maybe. But how significant? No, it's just really a snowball. And then I can break down context and nuances and attribute, a way of scaling those assumptions thereafter.
So I'm going to bring you back to something you said way earlier because I found that super interesting. You said that your best trade of your career was one where you actually did not abide by the system, but actually used some discretion and used some fundamental analysis. So the question now is, would you ever rely on that again in the future? Is that something that's now in your bag? Do you feel like you can rely on using something outside of your system, something personal, something discretionary, something fundamental to add to your trading in the future? Is that something you've thought about?
That's a great question because truthfully, so here's the thing. And it's not that I'm not confident in my own abilities. It's that in 7 years of trading, because I have been trading for 7 years, I've been trading crypto since November of 2017, but I've been trading for 7 years. In 7 years of trading, I have not convinced myself that my instinct or my interpretation of, say, news events or fundamentals or a thesis or a narrative or application of narratives, I have not convinced myself that my application of those things is alpha in comparison to anybody else. So anyone else watching this right now, I can't honestly say that I have a better read on the Grayscale news here than you do. I don't actually know that to be the case because in 7 years of experience, sometimes I'm right, sometimes I'm wrong. I haven't really had a convicted resume of me being able to do that. But the one time that I'm able to apply it in a sort of 70 IQ manner, meaning like, one, I didn't have to think too hard. Bitcoin was literally created for that reason. USDC depeg and banks going insolvent. Literally one of the reasons that Bitcoin exists today, right? So it's like 170 IQ reason. And then two, the trade itself was not so much a trade per se in my eyes. It was me trying to survive as a market participant. Right. It was the market pushed me into a corner and said, you have these 3 options. And guess what? They all suck. And somehow I managed to make it out of that environment of where the market pushed me into a corner and said, these are the only 3 options you have. Somehow out of that, not only did my Bitcoin appreciate 30% in 2 days, but on top of that, my stable coins went back to $1. So literally could not ask for anything better. Yep. And to that, I say, it's not a matter of, am I willing to entertain my own thoughts, my own speculation again? It's a matter of putting myself in a position where I'm allowed to take advantage of opportunity whenever it shows.
Yeah.
And so like opportunity presents itself, and it's such an amazing opportunity. And in this case, it was actually the exact opposite, and it turned into an opportunity. But it's such an amazing, like asymmetric kind of bet. It's just an opportunity that you cannot pass up, and you kind of see no other way to not justify taking it.
Yeah.
Right? Maybe even the market forces you to take it. Maybe that's the case. So it's that. And again, 3 years have gone by. I've used my own instinct over the chart once. So
Right. Yep.
it's like, it's not really frequent, but I'm at least always going to be in a position where I'm able to have that option available to me. Because for those that don't know my story, I don't know if you know my story, but in March of 2020, I got destroyed. So leading up into March of 2020, I was actually the most egotistical. I try and say that I'm humble now. Some people disagree. I try my
I
best.
like arrogance, by the way.
I try my best to be humble. At times, crypto Twitter gets the best of me, and I'm like, dude, I'm sitting here watching people scream, "Oh my god, you guys don't realize how amazingly bullish this grayscale thing is." And then 2 days later, they come back and they say, "Oh, I had a feeling we would fully retrace." And those two tweets get a cumulative 5,000 likes and a million, impressions. And I'm over here like grinding and trying to get 100 likes a tweet. And I'm like, dude, there's something not right with this. But so I try and stay humble. But in 2019, I was incredibly arrogant. Sorry, I didn't mean to cut you off.
No, go ahead.
But I was incredibly arrogant. I was the person who tried to call every bottom and every top. And honestly, I did. I did incredibly well. I that just kind of fed my arrogance. It fueled that fire. So I nailed those bottoms and tops all the way into March of 2020. And the one time that I was wrong on a major move was March of 2020, where prior to that, I was convinced that, okay, I'm going to buy BTC at 6.4K. I'm going to, right. And at the time, I'm trading with 100% of my net worth. My risk appetite is much higher because I'm still trying to quote unquote make it. So I'm like, all right, basically 99% of my net worth is in whatever my trading portfolio is. And I'm not, there's no balance here. There's no, hey, I have a ledger but I'm actually bearish on crypto. I'm either 100% in or I'm 100% out. So I was 100% in at 6.4K. I could then go 100% out at 10K. I'm like, okay, I bought the bottom, I sold the top. What happens next? Next, we're going to pull back. We're going to test these 200 daily moving averages. We're going to test 8.2. There's a 8.2K. There's a demand zone there. That's going to be a higher low. And from that, we're going to go on. We're going to go into a bull market. We're going to go into new all-time highs. And I'm going to make a shit ton of money and whatever, right? That was the thesis. And then, yeah, obviously March of 2020 happened. So I was 100% allocated, and I hadn't experienced what it was like to be a loser. And so when I was finally a loser, I'm sitting there watching as my entire account, my entire net worth essentially is down negative 15% 2 days later. I don't know what to do. I fell into a state of paralysis where I wasn't able to take action, even though my system, right? Because I wasn't trading a system there. I was trading my thoughts. I was trading, right? And my thoughts we're going to go up. And the market here is not going up. It's instead putting in lower lows and lower highs. But I'm coping because I'm just trading my thoughts, right? My thoughts haven't changed, but the market has. So the market's changing. It continues to change. It continues, right? It continues downtrending. And the whole time I'm still in that state of paralysis because as, my conviction stays the same, my entry price gets farther and farther away. So my paralysis just continues and I'm just unable to do anything. Yep. So I got wrecked in the sense that I wasn't trading leverage. I didn't get liquidated, but I watched as my entire account drew down negative 80% in the course of a week. That totally changed the way that I view markets. So the point that I'm trying to make here is in March of 2020, I wasn't buying a dip. I did not buy $3,000 Bitcoin, $4,000 Bitcoin, $5,000 Bitcoin, or even $6,000 Bitcoin. I didn't have the ability to do so, nor did I have the courage. Right? I didn't have the balls. Yep. So I didn't have A, the funds, or B, the courage to do either of those two things. It was never even an option for me. At least, right, 3 years later, when something similar happens and, basically stuff hits the fan, at least I provided myself that opportunity and I was able to take advantage of it. And it didn't just, it wasn't an opportunity that just came and said, hi, and then like left. It smacked me in the face, backed me into a corner, and forced me into the greatest trade of all time. So,
Yeah. I think one thing there that I want to say is like I'm a big fan of Trader Magus. I learned a lot from Magus, and he always talks about like when he's on a roll and when he's on fire, he really wants to press his edge, and he can feel himself. And I think this is an experience thing of getting egotistical, of getting arrogant, of feeling like he can do everything, of feeling like he's going to nail every trade. But he knows, like he has the wisdom to know through experience that the loss is coming, the ego humbling moment is coming, like
yeah.
so it's this beautiful thing where once you have that sort of symbiosis with the market, that rhythm with the market, you know you're there and you can really press that edge, but at the same time understanding that like everything's going to revert back to the mean. You are going to get humbled. So to recognize like there is a moment coming, just don't let the market take it from you, right? And I think that's the important lesson there. Like you probably learned that yourself in 2019. I learned that myself last year in 2022, where I thought I had a system that was working for me super well, and I got caught trying to fade a trending asset. Like I was fading everything in 2022. You know, every lower high was for selling. And I've picked the one strong coin in quant at the time to be like, I'm going to fight this trend. And that thing went absolutely bonkers.
Yeah.
And I learned a lot from that. And I think the beauty of also getting humbled is you bounce back the hardest. Like it's your failures that actually teach you the most. Like you don't learn a lot from winning. You learn so much from taking that market humbling loss, and not even just trading, but anything you do. If you're an athlete or whatever, it's the losses that teach you the most. So I think that's really important for people to understand. Is like when you're in the hot streak, let that hot streak roll. Understand that the loss is coming. Don't let that loss hurt you too bad, and use it as an opportunity to grow.
Yeah, 100%. I totally agree. The whole you don't really learn a lot from winning, you learn more from failing. I'm stealing that, by the way.
Yeah,
I'm I'm going to copyright that.
no worries.
Uh
Take it.
no, but no, I say the same thing, and I call it confidence in trends. So you're not allowed to let your confidence in the trend sustaining increase parallel to the trend. So I'll just draw a quick graphic as to what I mean by that. So if this is the trend, right? A lot of people will move parallel to whatever the trend is doing. So when the market goes down, they have less confidence. When the market goes up, they have more confidence. So that means that as the trend continues, right? So the high is here. You know that things are cyclical. They move in tandem. Everything is balanced. Everything has a mean that it needs to revert back to. This is the laws of nature, right? So every upswing is going to have a downswing, just like life. Sometimes you're going to be euphoric. Sometimes you're going to be down in the dumps, right? So you know that that's the case, but here's your confidence in that trend sustaining, increasing parallel to the trend. And that's an issue because that means that when that trend does finally break, your confidence breaks and your portfolio reflects that.
Mhm.
So that one loss that you take fully wipes out all of the wins that you had. It doesn't matter how many times you were able to call a bottom, call a top, be the genius, pinpoint accuracy, whatever, buy the trend 18 times prior to it finally breaking. That one trend break gives all those profits back and then some.
Yeah,
That's
I
the
mean,
issue.
it's the same thing in sports, right? You'll see a pitcher who's pitching lights out. He gives up a couple home runs, his confidence is shot, and now the manager can't rely on him for a few games. It's the same thing in sports, and I think a lot of what I do, I think why I've been able to catch on to trading a little bit faster, or I mean that's all relative, but whatever, is I use that sports mindset. I use everything of my experience playing tennis in my teenage years, and I brought that into trading because I realized sometime last year I had this big whatever realization moment of this isn't academic. This is a sport. This is competing. This isn't just like I can read a book and I can learn how to trade. It's not like that at all. So confidence is a huge thing, and it is something that I think you have to learn with experience of just not letting that last trade really sit with you. I was talking to a friend of mine recently, and he was talking about how, he took a couple losses, and then that next win that he got, he was in profit. And he's like, I need to realize these profits quicker. and he was screwing himself out of like an amazing setup. Like we were talking, we have a similar system, and he got like a once a week, once every other week setup, and he took profits too early just to compensate and play the P&L, play the equity curve, and be like, oh, I'm just, I saved those 3 losses, I'm back to where I was, instead of really just having the confidence to be like, this is the setup, I need to take a swing here.
Yeah. And that's the key there is the confidence, right?
Yeah.
So, I mean, the same, like inversely, like you said, where I'm saying confidence in trend increases, you need to not let your confidence decrease as the market does not reward you for taking what you're deeming quality setups.
Yeah.
And you don't have that kind of tug of war with yourself of, should I take this trade? The last couple ones didn't work out. You don't have that tug of war if you have the experience to back that up. If you have the conviction, if you develop the resume, every single time that, right? So pertaining to blackjack, I don't know how much you know about blackjack. I don't really honestly know much. I'm a LARP in that sense, but
Yeah, not much.
I know that I know that in blackjack, if you have a hard 16, so if you're dealt a 16 and the dealer's showing a face card, so they're showing a 10, statistically, it's in your best interest to hit. So if you hit and you end up busting, the next time that event shows up, the average person might think, oh, so I should have stood, right? If I stood, maybe I would have had a better chance at winning. So next time it comes around, okay, maybe I'm going to stand. But no, statistically, backed by actual math, by numbers, you cannot refute this, that you are better off by continuing to hit the next time, regardless of that one outcome. So trading is very much a similar kind of aspect in terms of once you develop the system and you have convinced yourself, and the issue is you can't really convince yourself by watching other people. This is why I'm totally for paid groups. A lot of my best friends have them. I advocate for them. I've referred people to go to their paid groups, right? But I don't actually adhere to the idea that you can just make generational wealth or become successful by copying another person.
Absolutely
Because
not.
in order to actually develop that kind of conviction or that resume, you have to actually see it in real time. And you see this in all different kinds of aspects of life, where somebody will tell you something and it can be a word of wisdom. And deep in the bottom of your heart, that they are right, but it doesn't actually click until you experience it yourself.
Yeah, I
So
think what I just drawing off that, whenever someone asks me, "Hey doc, should like I want to learn how to trade. I opened up this. I've been trading in TradingView paper trading, or I've been doing this in a demo account." And I'm like, "Dude, stop right now. You're not going to learn anything from paper trading. You need to put something on the line. Like if your net worth is $1,000, you need to be willing to at least trade 100 or 50 or something that's not going to kill you, but something that's you're going to feel the emotions of the trade, because
yeah,
you're not going to learn anything from paper trading. You're not going to learn anything from copy trading someone. I have the clinic and I post literally everything that I do in the clinic because I'm just using it as a tool for myself. I hear myself speak out loud. I see myself, showing trades. I bounce ideas off other people. People copy trade what I do. Great. You can make money that way, but you're never going to be long-term successful. I'm not going to be here forever feeding you trades, right? Same
yeah.
way, like a mentor for me is not going to be there forever. You got to learn how to do it yourself.
Yeah, man. And this has been vindicated. This has always been a thought, but it's been kind of vindicated through my years of experience, because for a while there, I was working for multiple paid groups as community manager, writing newsletters, doing all this different stuff. And I would watch as, if we would go on a win streak, or not we, because I was never the person actually sending signals, but whoever the analyst is would go on a win streak, and they would show 13 trades and all 13 in a row hit and go to their final TPs, and everyone's quote unquote everyone is euphoric. Yet then we go on a losing streak of 3 or 4 trades, and 80% of the group is like down horrendous and like doesn't know what to do.
Exactly.
Why? And then you ask them why. How is this possible? And it's like, well, oh, I missed out on the trade because I live in a different time zone. I missed out on the trade because when it triggered, I was out for dinner. I missed out on the trade because it was only sitting at entry for all of 15 minutes. And then, hey, the trades that I did catch, I realized the full losses of them. And it's like, so when you're winning, you're not winning as much, but when you're losing to the same amount. So no matter what happens, you're just going to remain a loser because you're just copying, and you can't efficiently copy, right? Unless you, I don't know, API data or something ridiculous. But again, just kind of find your own way. And the thing about markets is they're beautiful in the sense that if you want to navigate markets, it's really a matter of trying to navigate yourself. A lot of it is it's like fighting the inner beast. It's like trying to master your own emotions, master your own innate nature. Find
Yeah,
out who you are,
yeah,
what things are you particularly strong in and weak in. And as just a quick example, in my innate nature, ever since I've been a kid, I'm very passive. I'm very much like timid. I'm not very aggressive. I don't talk a lot, believe it or not. Right. But I don't like adrenaline. I don't like roller coasters. My girlfriend wants to go skydiving. She just told me the other day, and I'm like, yeah, you're on your own on that one. Like, no way, no way, I'm jumping out of a plane. That's who I am in my real world, in my actual personality. So when I started diving into markets, the main issue that I was coming across was I would take profits too early. I would find that every time I see green, my kind of like monkey neuron brain activates, and I'm like, ooh, I want to lock that in. I like the color green.
yeah,
But then when red would happen, I was like, I don't know what to do here. Maybe I need to just market close for a loss, or maybe I need to get rid of my stop loss and hope and pray that the market forgives me and runs back to my entry so I can close for break even. And that was my issue. So when I was losing to my full amount, if not more, because I didn't have the discipline to keep my stop loss in place and not double down on my position size and do all those things. But then when the trade would actually work out in my favor, I would close it well before it actually rewarded me to even somewhat make up for all the losses I had taken prior. So
right.
I had to learn that through years of experience. And so, yeah.
Yeah, I actually agree with you. I have the same thing for myself, is that kind of natural risk adversity. I was talking to a friend about it earlier today, and it's kind of like I went full-time crypto this year, right? And so there's no passive flow, passive capital coming my way. So I always have to think about, well, I can't afford to blow up. Well, I should be able to do this. Well, this is X amount of money has been made, whatever, like that, right? And I think that risk adversity as a trader is something you need to get over, because there's very few times where you have that kind of free money trade and you can't get in your own way, right? It doesn't matter if you're trading for a 1R or if you're trading for like a multiple or whatever it is. When the momentum's on your side, when the trade is on your side and you have not been invalidated, you can't really get in your own way. You have to let it play out. And I think with experience, you can notice certain top signals of cyclicality when it like becomes the overwhelming mind share on CT like Unibot was a few weeks ago, right? There are clear top signals in the markets, but you have this urge, and I did too with Unibot. I was selling it kind of on the way up, periodically reducing my risk. I did the same thing with Pepe. I rode Pepe for a 20x, but I only took out 7x profits because I was taking out profits on the way up because it felt like, oh my God, it's up another 20%. It's up another 20%. I'm seeing the P&L go up, but you're getting in your own way, right? And I think getting over that risk adversity is something that not a lot of people have in common as traders. I hear a lot more people saying that they're more risk, accepting, and they take massive losses, but they all take, they take bigger wins. So it's kind of cool to hear you saying that, because not many people share that kind of trait with me, where it's like, well, I've made a lot of money. Let me take the money because it's there on the table. Like you said, you see green, your monkey brain says, let me secure this. That's something I've had to deal with and grow with. And this year has been a phenomenal teacher in that, because there's been multiple trades where I've been in that are doing multiples. And I'm like, okay, can I just do a little bit better than last time? Can I control myself a little bit better than last time? Because 2023, like I keep saying, is the practice year. It's not, we're not in the World Series yet, and I'm bullish on crypto. Not a lot of people are at this point anymore, but I think greener days are coming. At least, if you can't imagine 100K or 200K, you gotta imagine we're going to revisit 60s, right? So in those moments, you're going to see a lot of numbers going up, and you can't get in your own way. So it's just
Yeah. Well,
something cool that we share there.
So, I mean, it is incredible, because we probably, if we were to sit here, just me and you, and bounce off of each other, we probably have run into a lot of the same obstacles in our trading journey. Probably incredibly similar. But yeah, all that means is if someone else is in nature, more risk aggressive, then they probably just run into different obstacles than we do. So maybe their issue is not taking enough profit, right? But you have to actually go and trade, like you said, with some amount of money. And it doesn't need to be, you need to be risking it all. You either are going to make it or you're going to end up poor. It doesn't need to be that, but it does need to be something where at the same time, it is a balance thing, right? Everything in trading is a balancing act, is what I found. Is it needs to not be enough to where you lose sleep at night, but at the same time, it needs to be enough where you actually are satisfied if that trade does work out. You can't just like, oh, wow, yippee, I longed the 4-hour 200 MAs breakout on BTC. It ripped 20% and I made $20. Like, I don't even care. Like you can't do that, because then you're not actually giving yourself any sort of anything to actually go and base something off of, right? Because you're not going to trade that differently than, or I'm sorry, you are going to trade that differently than when you do start to size up to something that you do actually care about. So it needs to be a balancing act. And yeah, a lot of trading is mostly just innate natures. I wanted to go to something that you said, and cyclical kind of nature of markets and being bullish on crypto. I think people, well, I don't know, maybe I'm just kind of deflecting here, but I think people perceive me, because this tends to be the case on crypto Twitter in general, as when I'm bearish on the entire space. I think zero, I can only think in extremes, but that's not actually the case. And kind of, again, pertaining to what you said, is this is not a bull market. This is not a bear market. It's what I call the gray zone. And the gray zone is, like you said, 2023 is the practice year. It absolutely is. I 100% agree. 2018 and 2019 were my practice years. I then thought, right? I forgot what it's called, but Pierre Crypto always sends out the chart. He always reminds me of it. When you get overly confident and you think you know it all, and then
Dunning-Kruger.
Yeah, Dunning-Kruger. That's what it's called. I didn't want to screw that up.
Yeah.
But yeah, Dunning-Kruger effect. And it's that overconfidence. And it was the practice year and then another practice year and grinding, spending, I kid you not, 14 hours a day, nuking my mental and physical health, nuking all of my social relationships, all that stuff. That's just because I need to watch charts every single day for those 2 years. I need to practice. I need to make sure that I'm going to make it. I can retire my parents and I can afford the yacht that I want and buy my favorite NBA team, right? That's the dream. So that, and then Dunning-Kruger, and I get humbled, and then I can actually start my journey from there. And the bull market takes off, and I'm well prepared for that because I navigated the gray zone. And even though I didn't navigate it the way that I could have, right, because I basically gave everything back in 2020, I still allowed myself to develop those kinds of ideologies. And as you said, or as we said, I guess, I experienced it. I built my own resume. I then was able to take what worked and then throw away what didn't work, and take the good things and throw out the bad, right? And then from there, I was able to develop these ideologies and philosophies that I have today, like snowball to snowman, or everything in trading is a domino effect, or don't allow your confidence in trend to increase parallel to trend. Like, I had to experience all of that. And then on top of that, I had to get comfortable with pressing the buttons. So that is key, is recognizing that this is not a bull market. This is not a bear market. It's just simply the market. You have to trade it as such. There's context, there's nuances. It's weird. It's choppy. It's all these different kinds of things, right? It's like, hey, we're uptrending on this time frame, but we're sideways on this one, but we're bearish on this one, and we're bearish on the higher one than that. It's like, okay, that's really odd, right? It's not, we're either going up on every single time frame. It doesn't matter if you're looking at the 1 minute or the weekly. We're going up, or we're going down trending, right? And we're heading to the bottom right corner on every single time frame. Doesn't matter if you're looking at the 1 minute or the weekly. It's not either of those two things. So navigate that zone. But I do agree that even if I'm bearish on crypto, I'm still bullish on crypto, if that makes sense. Even if I'm bearish on the market, per whatever the chart is saying, because again, I just kind of think of myself as the messenger to the market. I don't really apply my own speculative thoughts or whatever. If I do, it's mainly in the form of a crap post, I will say, on Twitter. So, hey, why do I care about the Grayscale SEC lawsuit, right? It's not actually that. It's that the chart agrees with my stupid little thoughts. So I'm able to go and say that on Twitter. Why? because the chart agrees. So I'm just the messenger for the chart. The chart is downtrending on this time frame. It's sideways. On this time frame, it's also downtrending. This is something we have not done in the past 8 months. If that changes, I will change with it, and that will then coincide with what I truly believe is that crypto is incredibly bullish on a long enough kind of outlook. I don't see how it wouldn't be. So I know that I'm taking up more time and I'm going off on many tangents here, but
it's all good. It's all good. I love that free flowing stream of consciousness, because that's how we all are.
Yeah. But yeah, I don't really see how crypto would not be bullish on a long enough kind of time frame. It really doesn't make sense to me. People meme me for saying this, but it is honestly the truth. Bitcoin is literally mathematically programmed to, in theory, in parentheses, in theory, increase in value every 4 years because it cuts its own supply. Okay, you don't want to acknowledge that. That was very cringe of me to say that. Okay, sure, whatever, that's fair. But then take a different perspective. One, humans are greedy, and that will always be the case. How do I know that that's the case? Because we all, literally every single person watching this right now, me and you, Doc, we all know someone or were affected by FTX heavily, meaning like this person totally either got their life destroyed or they lost a massive amount of their portfolio or whatever, right?
Yep.
We all know somebody who was either affected or we personally were affected. Yet when I hopped into my Discord chats, all I saw was, is this a good dip to be buying right now?
Right.
That's greed. That is 100% pure greed. If that does not show you that humans in nature will always be greedy, I don't know what does, right?
I agree with you there.
So humans in nature will always be greedy. That's a absolute guarantee. Death, taxes, and greed. Honestly, that's how I think about it. And then two, crypto in terms of an industry as a whole, if you just want to speculatively bet on anything that is risk asset, then it is such a small piece of the pie in comparison to the greater scheme of things. Nvidia stock has a greater market cap than all of crypto combined.
Insane.
Which is absolutely ridiculous to think about.
Yeah.
Just Nvidia stock alone has a greater market cap than all of crypto combined. Yep. Gold, which I know people like to compare Bitcoin to gold. It's not what I'm doing here. That's not even the bullish analysis that I'm giving you or my speculation, whatever. That's not even part of it. Gold has a $13 trillion market cap. That's 13 times bigger than all of the market cap of all of crypto. That's just gold alone. And on top of that, money in itself is depreciating year over year, therefore in theory, theoretically, increasing the value of risk assets year over year because there becomes a lesser incentive to hold your money in fiat cash because it continues to depreciate year over year. You should instead, logically, look to move your cash into something that is appreciating. Risk assets, therefore, should increase in appreciation in value. So more money is getting printed. There's way more money out there than we can even possibly fathom that has not potentially even dabbled in entering the space yet. And what else did I say? Humans are greedy as all, right? Humans are just greedy. And Bitcoin is literally programmed to be this way. So I don't see how in a long enough time frame the space does not thrive, similar to what we just saw the past few years or so. Now, whether that happens in a 4-year cycle, similar to the past 3 times, I don't know, nor do I really care because I'm 24 years old. If this doesn't happen next year, as everyone's kind of projecting that it would, based on the theory of 4-year cycles or whatever, I'm totally fine with that. I couldn't care less, honestly.
Honestly, here's the thing. Here's where I stand. It doesn't even matter. It doesn't even matter because like you said, you mentioned FTX, probably the most brutal thing. I remember Kobe, I always defer to him when it comes to something with crypto experience. He says like that was the one event for the first time ever it made him feel like he wanted to quit crypto, right? So it was that devastating of an impact. And here you are 2 months later. I think, when was FTX? Middle of November? 2 months later, we go on an insane like bull run, right? And you see the greed come back, and you see on-chain come back, and you see scams come back, and you see all the influencers come back, and YouTube's going crazy, and it's just 2 months later. So if you're not bullish on greed, like you said, what are you seeing out here, right? And number two, we don't need to go to 100K. We don't need to go to 200K. Even if we go from, what are we, 20, whatever we are at 26, let's say we go down to 20 or 19, and we go there from 20 to 60, and we just revisit all-time highs. Do you know how much wealth opportunity there is? Look at what we had this year. Look at all the risk curve rotations that we had. Look at look at everything that's happening. I don't know how many millionaires have been printed in 2023 if they were just active and a participant in the market and had some like risk tolerance, right? So these people that are like, oh, we need 100K, oh, Bitcoin would fail, we don't want crypto, this and that, like, dude, you don't understand how much opportunity there was just this year. And Bitcoin doesn't even look that great. It underperformed Nvidia, it underperformed Tesla, but like, look what crypto gave you.
Exactly. Yeah. So what I always kind of call back to is I have a ledger account, or a ledger of which I have not touched or withdrawn money from to sell, or withdrawn assets from to sell since 2017.
Mhm.
That means that I've constantly been dollar cost averaging, and that only stopped somewhere over here, I believe. So somewhere over here, I stopped dollar cost averaging to that ledger. I finally decide it doesn't make sense to continue dollar cost averaging on the way down the same way that I did all throughout 2017 or 2018. I'm not in the same kind of position that I'm in. I'm just going to keep it as is. I have not sold any of those assets. That means that that entire ledger, which accounts for a good amount, a good chunk of my overall net worth, that means that that ledger drew down negative 80% in the course of that year. My account sits, my net worth sits probably, if I had to guess, around 10% off of its all-time high.
Yep.
So my all-time high was right here. That is the, like, that's the potential. That's the opportunity. That's the real kind of like reason that we're here. And
Yep.
You're right. We don't need 100K. We don't need a euphoric bull market. We don't need celebrities to start, shilling their scam NFT projects again and marking a euphoric time. We don't need all of that. Even if it's just 100% rally in the course of 9 months, that is enough opportunity in itself, right?
100%.
It's like, yeah. So, I mean, we go and look at this chart. Okay, well, we're breaking out of this range, right? We're reclaiming structures. We're shifting structures bullishly. I mean, we're reclaiming 4-hour 200s. Oh, look, we're deviating back inside of a much bigger range. Oh, now we're breaking outside of that range. Oh, now we're flipping 200 daily moving averages. Yeah, all these things imply a much greater and a much more favorable and a much more bullish kind of market environment. And this idea and this thought is portrayed a bit more effectively when we go look at the ETH chart. So ETH chart, 200 daily moving averages, that's all you really needed. And again, I have all the receipts. This is my tweets. I have all the actual, orders to go along with it. Yep. But 200 daily moving averages, that's all you really needed. And that in itself just gives you a 50% move in a couple months. And it's like, that is extreme opportunity right there in front of your face.
One of my favorite EXO quotes from last year was, you guys all got out traded by some boomer EMAs. And it's kind of funny that it's still holding up true, right? If you're just playing the weekly, you're just playing the high time frame, you could just look at like 1221s. I think you're using the 200s, but like they all come down to the same thing, right? You're just on high time frame getting out traded by some boomer EMAs.
Yeah. So I will clarify. The blue is 200 EMA and the green is 200 MA for anyone who's watching. And the reason that I use both is because many, many years ago, when I would ask a more experienced trader, hey, what's better, EMA or MA? Literally everyone gives me a different answer. So some people will tell you, oh, EMA is better because it adapts faster. And then MA, or some people will say, yeah, but then use MAs on higher timeframes. And then like everything is different. So I was like, okay, I'm just going to use both. And then I found that if I just use both, I'm able to actually get the idea across the way that I should be trying to get the idea across. I'm not trying to pinpoint and be an exact genius. Obviously, when this is what the price action looks like along the moving averages, then it's very much ideal. And that's like the world is rainbows and butterflies and dandelions. But the idea is it's a general portrayal. Generally, somewhere in this region, I can be looking for a major trend shift or trend continuation towards the downside. or right here trend shift. So it's a general idea of whatever the trend is. The actuality of it, or I should say the reality, is at any given time, I already know what's happening in the market. I know, because even a 4-year-old knows that that's a downtrend. I know that this is an uptrend. I know that this is relatively sideways. I know that this is downtrend, because even a 4-year-old knows it. If you go show a 4-year-old any of the circles that I just marked out, they're 100% going to tell you everything that I just said. So that means that a 4-year-old has the same analysis as someone who has 7 years of market experience. And then when I turn my moving averages on, it helps me portray that same idea. So moving averages never tell me what the chart is doing. I already know what the chart is doing, and then the moving averages help me portray that idea.
Yep.
So I know that was, we didn't discuss that, but I get that question a lot.
So look, we've been talking for 50 minutes and I swear there's like 10 more things I want to ask you. So let me like fire some off really quickly. We don't have
Yeah,
to
sure, man.
go super quick about it. So one thing we this came to my mind because you mentioned blackjack and how we were spending, you spent 14 hours a day in front of the computer. I'm this year, I don't even know, it's probably like 18 hours a day in front of the computer.
Yeah.
Is there a moment or something that you could say or you could differentiate when you're on the grind to try to get better versus just being addicted to the game and having diminishing returns, where you're saying you gave up your health, you gave up your relationships? For me, for you, that was, 2018, 2019. For me, that's this year. This was my practice year. This is the year that I put in all the work. This is the year where I put everything out on the outside. And I'm in this mode right now where I'm like, I made the bag. I completed what I wanted to complete. What I need to do right now is basically recover. But I still see myself in front of the computer for still like 8 hours a day, not really accomplishing much. So I'm saying, what do you have any advice for myself or anyone out there that's kind of like, I don't know if I'm really on the grind right now or if I'm just kind of addicted to all the dopamine that comes along with crypto? Have you experienced that yourself?
There's a. Oh, okay. Sorry. There was a fire alarm going off in my house. I think someone's cooking something and started
I heard that.
smoking. Yeah. I wasn't gonna start talking though, but I think it just turned off. Um, uh, so I know what you're talking about. There's not really like for me at least, there wasn't like a line in the sand where I was able to finally differentiate. Okay, I'm not just an addict. I am someone who grinded. It was more of like my portfolio started to allow me, or really it was my lifestyle started to allow me to not have to put in the same amount of effort that I was previously putting in. And so really that time for me was the first drop in on BTC. I believe it was like April of 2021. That was where I was like, okay, I can kind of take a more passive approach, right? Because at this point, I'm like, all right, I've grinded for all of these years. And so, I mean, and here's another thing. A lot of people are sitting here right now watching this, convincing themselves that I'm going to put in the effort today so that I don't have to put in the effort come bull market. So what you just told me and what you just told yourself is I'm going to sit here and watch a screen for 18 hours a day in a market that is not very opportunistic in order to gain some experience and intuition and extract value from the market so that when the market provides me excess value, I can just kind of screw off. It's like, dude, you're lying to yourself. If that's your approach to the market in this kind of a market environment, which first of all, respect, because it's not easy. Most people screw off, right? And the market gets boring. Well, parallel to that, people start to lose interest. Yeah, that makes sense. Oh man, here goes this alarm again. Is it annoying?
I hear it.
Can I continue talking or should I stop until?
We can. I mean, I could pause it right now and then we could just pick it right back up. I think I
Oh,
can
you know
just link
what?
the two videos together.
All right, it just stopped.
All right, well, screw it. We'll
Hopefully,
just
it
leave
doesn't go off
Fine.
again.
Super authentic.
Okay. Yeah. But yeah, a lot of people convince themselves like, oh yeah, I'm gonna set myself up for success so that when the bull market comes, I can just take 5 steps back and never touch anything again. Dude, you're lying to yourself. If you're addicted now, it's an addiction. You're trying to hustle. You're grinding. You're trying to set yourself up for success. So when things become better, you're going to milk the most out of that opportunity because that's who you are as a person. That's just going to be something that happens. You're not going to be able to walk away when the market becomes more favorable.
That's a good
It's
answer.
just not realistic. So stop lying to yourself today.
Yeah.
What happened for me is I was grinding. I knew that I nuked my physical and my mental health and whatever, which, by the way, if anyone else is doing that right now, I'm not saying that you are, Doc, but if
Oh,
anyone's
I
doing
definitely
that,
am. I definitely did. I sacrificed a lot for this year, and now I'm like, I need to get out of the room. I need to get out of the office. I need to get in the gym.
yeah, dude, there's a fallacy as well where it's like, oh, I'm not going to worry about working out. And, I don't need to worry about the 30 pounds of weight that I just gained or like whatever, right? For me, it was, I was in peak physical shape. I was, pretty sculpted. And then I just got skinny and lost all my muscles. So people convince themselves, oh, yeah, I'll wait until I'm wealthy and I have generational wealth and I've secured it. And, right, my grandkids' college tuitions are paid for, and then I'll start to work on my mental health and my workout routines and whatever. It's no, dude, start now. Um, and then when the market, when you have extracted what you wanted from the market, you then have the ability to walk away because the need to make it, the necessity is not as dire, right? There's not as much urgency there. So it's not that your flame has diminished. It's not that you lost the fire in your belly, the thing that keeps you going. It's that it's not a matter of make it or not. It's now you have something to lose. So do your best not to lose it. You don't need to sit there and watch the 1 minute chart for 12 hours a day in order to, right, in order to put yourself in a good position. You've already put yourself in a good position. You just potentially have the capability to be in a better one. So take a step back, look for those asymmetric opportunities, stay affiliated with the market. For the past, I would say 4 years, there has not been a single day where I have not looked at the BTC chart. And for probably, if I had to guess, 98% of those days in the past 4 years, I have written in words a paragraph in the form of a daily market update, whether that was for a group that I was working for or just for a personal thing. I have always stayed in tune with the market every single day for the past 4 years. I traded in 2022. I think in 2022, I maybe took 3 or 4 trades a month on average. So that was kind of my outlook. But in
That's the off
2018,
season.
I was the person who took probably 20 trades a day. Like that was, it's a totally different mindset, but it was
Right.
because the lifestyle changed.
Right. So the question, of the summary question there would be, when you were in 2022 taking 2 to 3 trades a month, did you find it that you were still spending what's the right way to put this, diminishing reward amount of time into the market? Were you still spending 8-10 hours a day on the market? Were you able to say, look, I don't need this, I'm not trading, I need to do my quick one paragraph, I need to do my market update, I need to stay in tune, and then let me go fuck off and do whatever for the rest of the day? Was it more like that? Is that safe to say? Were you finding yourself sort of like, I'm wasting time here? I guess that's the question for a lot of traders, is like, when you're in your sort of off season, do we all, because I think it's natural for all of us, because we're so into the market, to be like, well, I'm still looking at it way too long, I'm not getting anything out of this, but I'm still spending too much time here at the current time. And that's different for everyone.
So I think that the answer I'm going to give you is probably cope, because I think that you're right. I probably was spending more time than I needed to at the charts, staring at screens. But I'm going to say that no, it was pretty fair for what I was putting in.
Okay.
But I think it probably honestly is cope. I know Salsa Tequila has a something about this where he said, like, well, you guys make fun of scalp traders for spending so much time at the day or time at screens all day, but you guys take 3 trades a week and watch screens just as much as I do.
Right.
And
Yeah.
it's like,
Pretty funny.
so yeah, it's an amazing point, and it does kind of open your eyes a little bit. But no, I think it was a fair amount of time, just because of the fact that personally I'm kind of like a character on Twitter now. I'm active in all these different discords. A lot of my friends on the internet also are affiliated with crypto, so it's
Yep.
like,
It's a full
I
life.
live, breathe, and die crypto, right?
Yeah.
So yeah, so it's not really just like a hobby, it's a lifestyle. So
Yeah.
and even then I was making YouTube content, I was, whatever, right? So writing threads, all this different stuff. So I think it was a fair amount of time, but no, if I were just purely a trader and social media did not exist, then I kid you not, I needed to literally come in, or at least I needed to log into my exchange, which was Bybit. I needed to log into Bybit 3 times a month, and it's
Yeah.
like there wasn't really a lot of opportunity there. And yeah, like this is one of them. We reclaimed 4-hour 200s. This one was we reclaimed local trend and shifted local structure and reclaimed local levels. And then we broke out and 4-hour 200s on Solana and DYDX and or not DYDX. What was it? Oh, DOT. All these different coins and all these layer ones. And yeah, those uptrends are starting to shift bullishly. And then here's another one. ETH does 60% in this region. That one trade in that 1 month gave me 60% value, right? Like I didn't really need to put in too much effort. So, but I'm going to say that, yeah, I probably put in too much.
I like that. We'll do 2 quick ones and then we'll get out of here. Cause dude, anytime I talk to another trader, I swear I could talk for hours. So
Man,
I just
me
need to
too.
remember that people don't have hours to sit here and listen to us talk.
Yeah, we can honestly do this a couple more times. I don't think we would run out of content.
No. But 2 quick ones. All right. So is there any advice or lessons that you would give to a market participant that maybe underperformed in 2023? A quick, maybe one bullet point of like, you should focus on this thing so that the market does not leave you behind the next time it's risk on. Because I think a lot of people this year were just like, they didn't know when to get exposure. And the market gave them so many pump fakes and they didn't know what to do. And I feel like so many people underperformed, and the time that they put risk on, like maybe now when they're buying the dip, is probably not the right time.
Man, you are an amazing interviewer. You ask amazing questions. I don't know if anyone's ever told you that, but you are, wow.
Thanks.
This is incredible. No, it's an amazing point. So here's what I want to get across before I actually give you an answer to your question is a lot of people were coping, and it is cope. I'm sorry if this comes across rude, but a lot of people are coping with the fact that about 10 days out of this year have accounted for roughly 80 or 90% of BTC's appreciation in value.
Yeah.
So a lot of people look at that and they're like, wow, that's a way for me to justify missing out on the trend. Or, right, I didn't buy this dip, but it's okay because, right, most people probably also did not buy that dip. And whatever, because I only had 10 days. And those 10 days, if I missed out on those 10 days, that accounted for 90% of the appreciation in value in crypto or on BTC for 9 months. Okay, here's what I want to tell you. Did no one else read the article from was it Forbes? I think Forbes wrote it, or yeah, I want to say it was Forbes. There's an article out there. I want to say it's Forbes, but it basically is talking about how they back tested all the data on the stock market and the S&P 500 from the 1980s, and that exact statistic that I just gave you was on average the case every single year since 1980. Was 10 days out of the year accounted for the majority of appreciation and value in risk assets.
I think
10 days.
I didn't see that on Forbes, but I've seen GCR quoting Tom Lee of Fundstrat, and Tom did the same analysis for Bitcoin. He said in the 10-year cycle of Bitcoin, I think 2 weeks out of the year amount for like 70 or 80% of Bitcoin's gains are done in 2 weeks.
Exactly. So even if you're not going to take as exaggerated of an example as 1980s in the stock market, even just looking at Bitcoin cyclical nature alone, then this is also the case. So people were up in arms about this. Hey, right, somebody tweeted it out and it went viral, and people are like, oh, that's an amazing way for me to cope with having missed out on the trend all year. No, it's not, because that's the norm. That is exactly what tends to happen in markets to begin with. So you should come to expect that. So then once you start to accept that, it starts to become, okay, how do I make sure that when those 10 days happen, or those 2 weeks out of the year happen, I'm already pre-positioned. I don't have to kind of come into forcing myself into an uncomfortable kind of an analysis where I really have to have an otherworldly emotional discipline in order to convince myself and my monkey brain to market ape into this candlestick that I'm not really comfortable with market aping into. And if it pulls back -2%, I'm not going to justify holding on to that position. How do I not find myself to where that's the case? And it's like, dude, just trade the trend. So
Right.
my answer to that, to your question, what's the greatest advice that I could give somebody? Trade the trend. Trade the
Okay.
trend, trade the trend, trade the trend. Because again, and it's like using myself for an example, dude, this fire alarm.
Don't worry about it. It's actually so minimum. Like we can hear it, but it's not that bad. Trust me.
Okay. Using myself as an example, I have 7 years of market experience, and I cannot convince myself as to why I need to put my own arbitrary thoughts over the market, whatever the market is doing at any given time. I can't convince myself to do that. It's just not possible. So, how is it so that somebody with a year of market experience is able to then come in? And man, that's really distracting. It's hard for me to focus.
I
Is able to then come in and say, "Oh, I know more about this grayscale SEC lawsuit." I keep using that as an example because it's the most recent one, but I know more about this. I have a good read on it. I know what the market should
yeah.
do from here. How are you able to say that? You only have a year of experience. How many times have you come across a situation where you had to make that decision of how am I going to interpret this information over other market participants better? And then actually prove to yourself that you are alpha. You do have a good read on things. Your instinct is like genuine alpha that you should be abiding by.
Yep.
How many times have you been able to do that? I can't imagine very often. So you don't
So
have the conviction, you don't have the resume. So until you are able to develop that through experience, respect the trend.
yeah.
Watch whatever the market is doing. So my greatest advice is just purely focus on whatever the market is doing today and don't focus on what the market may do.
Yeah.
Because if you're just focused on what the market is doing today, it's impossible for you to be caught off guard for whatever happens next.
Yeah.
It's
Good
not
answer.
possible. So, in pertaining to crypto currently, while I know that we swept the lows and deviated back inside of this range lows, mid range, range highs. Well, if that same momentum carries us above the range and above the 4-hour 200s, then I know what to expect thereafter. Because here's what we're doing today.
Yeah.
And at the same time, we've been downtrending for the past 2 months. So if that same downtrend continues to win and eventually we do expand lower than this range, how am I allowed to be surprised? So, Mercury, what you just told me is if we go up, you're going to be right. And if we go down, you're going to be right. Yes, exactly. And it's like, no, I'm not. It's not the cringe. Oh, so up or down, but either way, you're going to make money. It's not that, but it's the truth.
Yep.
The whole point of being a trader is putting yourself in a position where you can potentially reap rewards and reap opportunities from the market, regardless of direction, regardless of whatever the market is doing. In order to do that, you can't be out here betting on one outcomes and putting your own stupid little thoughts that you have no conviction as to why you need to care about your thoughts so much over whatever the market is doing at any given time. You have to develop that kind of a feeling, and that
Perfect.
takes years. So
Yeah, man. Good answer right there. Basically, in summary, find a system that allows you to trade the trend. Do not argue with the chart and just respect what the chart's saying. And then the last thing I want to ask you is we've talked about so much in crypto, man. There's so many nuggets of wisdom and experience in this last hour. I really hope everyone takes the time to listen to it all. But outside of crypto, I always want to ask everyone, do you have any imparting wisdom on any health, life, or happiness?
oh man, yeah, absolutely. So this deeply affects me, especially as of recent. I won't go too far into detail, but I actually have some health issues that used to affect me about 4 years ago that have recently come up, and I had to get surgery, and I dealt with all that. So thankfully, I am blessed. I dealt with it, got my surgery. Everything went very, very smoothly, and I'm in an amazing position today. I feel good again. I was even sick. I'm not sick anymore. So I'm feeling great. And that kind of thing really does remind you of what's actually important in life. And the second thing is my mother, at the same time of this kind of news of my own, I guess, unwell being, my mother was told that she has breast cancer. So breast cancer, and it was actually the least aggressive form of breast cancer. It's actually the the very, very beginning of breast cancer, the earliest stage possible. So she caught it in the earliest stage you could possibly catch it in. So very, very grateful for that.
Yeah.
So just kind of taking that, outlook on life and reminding myself that even in the worst case of scenarios, I'm still in an amazing position. And like I hear people say this all the time, like you're sitting here begging me in my DMs for money, right? You want me to send you money because I'm an influencer and apparently I have all this money and whatever, and you want me to send it to you. Dude, you're sending me this message on an iPhone that's worth $1,000, right? Over, like, you're in a blessed position. So even if you're not in an amazing position, you need to make sure that you still respect life itself.
Yeah.
You still are grateful for the opportunity to come in and lose money in markets. That's an opportunity. That's an opportunity that not a lot of people have, right? I mean, again, you have to be that kind of like gratitude maximalist. And once you start to really develop that kind of appreciation for life itself, then markets become minuscule. And when markets become minuscule, you allow yourself the capability of trading markets as if you don't really care about them. And when you allow yourself the capability of trading markets as if you don't really care about them, you trade markets more effectively. And then suddenly, this thing that you don't really care about is something that you are actually able to achieve because you don't really care about it that much. It's not the end all be all to you. It's not your end game. It's just something that is going to either increase your life opportunities or increase your ability to pay for things, right? It's just that. But the real purpose of life is, right, having people that love you and being in good health and those kinds of things. So once you really appreciate those kinds of things, then markets become minuscule. And I think I don't have an amazing example of this. I have a decent one that might be good, but it tends to be like a law of the universe where the thing that you obsess over most, that, I mean, literal obsession, it's all that's on your mind. And for me, this was money for a very long time. It was my only purpose in life. So that meant that every drawdown, I felt like a failure, and every push upwards, I was unsatisfied because I would always underperform. It's not possible to outperform the market. It's just not. I mean, towards upside moves specifically. So whenever the market would go up, I'm unsatisfied. But when the market goes down, I feel like a failure. That's a torturous state of limbo that you live in. So you have to be able to detach from that. And it's kind of like a law of the universe that whatever you obsess over the most, you tend to keep away from you. It's like that carrot on a stick. You're constantly going to be chasing that carrot on a stick. And the only example that I have of this, unfortunately, is when you're in high school or maybe middle school and the girl that you're crushing over has absolutely no interest in you. She knows that you like her. She knows that you like her. She's uninterested because she knows at any given time she could have you. All she has to say is, hey, do you want to go out? Like, she's got you wrapped around her finger.
100%.
But as soon as you get a girlfriend that is not that girl, suddenly she starts to flirt with you more. Suddenly she starts to show interest, right?
Yeah.
Whatever you obsessed over, you were constantly pushing away from you. And once you stopped caring so much and you started to move on, you were able to then attract it. It's not an amazing example, but it is, at least I have experienced that. I don't know, maybe you were the stud in high school and you got all the girls, but
no, man, but that's a beautiful, beautiful way to end it. There's so much wisdom in what you just said there, like taking the power away from the market, and just kind of accepting that, it is not the end all be all. That's not your life. Your life is not dictated by the number of, the price of Bitcoin on any given day. It's not dictated by your performance in Bitcoin. Your life is so much more important than that. The people around you are much more important than that. And it's always good to remember those things, because when you give the power back to your life, you take it away from the market. And I think you can perform a lot better. So that's very well said, man.
Absolutely.
So we will end it there, man. We've been talking for an hour and 15 minutes and just powering through. I swear we could do another hour and 15, but we're gonna save it for another time.
I'd be happy to, man. Yeah,
Sorry.
I mean, I had a lot of fun.
Yeah, me too.
I love talking with
Thank
you, man.
so much
This is
for
our
coming
first
on.
time talking, but I feel like I need to talk with you more often. I feel like we're going to be able to bounce ideas off of each other and share stuff.
This is the start of something beautiful.
Yeah, absolutely. I definitely think so. So yeah, time flew by, man. I
I
appreciate
know.
the conversation. It was
Yeah,
very.
thank you so much for coming on. I hope everyone else enjoyed it. If you guys don't follow Mercury already, I'll leave his Twitter in the description below. So make sure you follow him. But I know you guys already do.
All right.
All right, brother. Take
Appreciate
care.
you, man.